to draw an equivalence of that in Bitcoin's term, the same would be if the US government actually acquired a bunch of Bitcoin, but eventually needs to borrow more than it can and needs to start pledging Bitcoin somewhere to borrow that money. And then the debt actually then becomes kind of larger than anything that it can be paid back for. And then it becomes kind of like nationalized in the construct of like the role of that asset. And that's like almost like the central bank of Bitcoin that you can imagine in the arc of history. We're nowhere near that, right? Like actually, like central banks have not accepted Bitcoin as part of that dialogue, but they have with gold. So I keep going back to this notion of like, we should not, as Bitcoiners, look at gold's rise as an adversary outcome.
Bitcoin was born as a challenge to the traditional financial order, but nearly 15 years later, its role in that system is still being defined. Jeff Park, a seasoned investor and commentator on global markets, noted that the comparison between SDRs and Bitcoin underscores the search for a truly neutral reserve asset. He explained that while the SDR was designed as a cooperative basket currency to backstop the dollar system, it has remained limited, acting primarily as collateral rather than as a tool for direct settlement. Bitcoin, by contrast, is not only neutral but also transactional, giving it structural advantages that could make it far more relevant in times of global liquidity stress. Jeff Park emphasized that despite favorable macroeconomic conditions, Bitcoin's performance has disappointed many investors. He noted that gold continues to capture confidence and liquidity, highlighting its centuries-long staying power as a trusted store of value. Gold, he explained, achieved this role not only through scarcity but by becoming integrated into the financial system, first through private banks and eventually through governments and central banks. In contrast, Bitcoin remains outside the institutional core, leaving many to question its reliability compared with gold's entrenched position. Jeff Park pointed out that for Bitcoin to mirror gold's historical path, it must move beyond speculation to become an asset held by governments and central banks. He suggested this could mean U.S. accumulation of Bitcoin reserves, using them as collateral, and integrating them into the monetary system much like gold was nationalized. Park emphasized that Bitcoin's long-term success hinges on institutional adoption and its integration into global finance. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the broader financial landscape. Thanks for watching.
The interesting thing about the SDR is if you think about what that represents as a co-op model, it starts to feel a little bit like what Bitcoin should itself be, right? Because SDR is meant to be a neutral asset because it's a basket of the 5 biggest contributors to the IMF. And it's also meant to be a funding currency of trade amongst the nations. And at the time, in 1960, 1970, this was the closest thing you can imagine to what a neutral asset can be. But now we have something like Bitcoin. And in some sense, Bitcoin replacing the SDR, to me, is kind of the right parallel conversation about what Bitcoin could represent. Because in this scenario, now what Besson has done is he's actually probably going to need to use the SDR out of the ESF to actually buy pesos, right? Because again, there's not enough dollars and not enough euros in the ESF otherwise to find a liquidity unlock. Instead of SDRs though, what if you pledged Bitcoin? And that's, I think, the interesting conversation about the role of how Bitcoin can serve in the plumbing of the dollarized economy through the SDR, through the Exchange Stabilization Fund, in the construct of the IMF, that we're just beginning to scratch the surface for, which is why I think it's really important for crypto investors and Bitcoiners to pay attention to what's happening in Argentina. What is happening in Argentina is precisely the learning of the plumbing of how the dollar works and the role of a reserve asset, and where Bitcoin one day might find itself to be more useful than the construct post-Bretton Woods like an SDR would be. I think the upside of the dollar being the export is great for the US, but the downside of it is that there often can be a funding gap between there just being a shortage of dollars that is needed to service the global economy. And so the SDR is the backstop because it's one step beyond the dollar, in which it's meant to really be that neutral reserve asset. And so when people do trades in SDR, it's really because they believe in like the communal like risk sharing model of being paid back in those respective currencies underneath it. But it's not meant to be used for actual FX markets, right? It's a pledge collateral. Bitcoin, as you've pointed out, can be more than a pledge collateral. Bitcoin can actually be transactional. And so it removes that fiction layer of what the SDR can itself be, which truly is a confidence game. Bitcoin, however, actually, if you were to say use it on behalf to rescue Argentina, you can imagine the collateral is actually more interesting and underwritable for somebody who actually believes in the more kind of, mechanism for what it represents without the other currencies involved. What is a little bit unconcerning is Bitcoin hasn't participated nearly as much. And I think that has been disappointing for some people. I think there are maybe some reasons why that can be the case.
Why?
But we're going to continue to find out as we go. I think people in crypto are quick to tout gold being inferior to Bitcoin, that Bitcoin is digital gold and therefore it's perfect in every shape or form possible. And therefore it doesn't make any sense that no one could otherwise see this. But I actually just don't think this is always true. I think gold is very special. And gold has had more staying power for hundreds of years for reasons that I think if you understand the role of money in history, you can appreciate what it stands for. And the punchline is this: an asset that's a store of value to become profitable, just so important that central banks get involved. In that framework, if you really think about like, what is money? Gold has had hundreds of years of staying power as a private asset for which banks were willing to do business with. And eventually the government then wants to do business with that private bank and take advantage of their reserve assets. And then it becomes nationalized. So to draw an equivalence of that in Bitcoin's term, the same would be if the US government actually acquired a bunch of Bitcoin, but eventually needs to borrow more than it can and needs to start pledging Bitcoin somewhere to borrow that money. And then the debt actually then becomes kind of larger than anything that it can be paid back for. And then it becomes kind of like nationalized in the construct of like the role of that asset. And that's like almost like the central bank of Bitcoin that you can imagine in the arc of history. We're nowhere near that, right? Like actually, like central banks have not accepted Bitcoin as part of that dialogue, but they have with gold. So I keep going back to this notion of like, we should not, as Bitcoiners, look at gold's rise as an adversary outcome. Actually, gold has had staying power because it's for hundreds of years been able to be a part of that modern economy apparatus. The question is, how do you get Bitcoin into that mix? And what can we learn from history to insert ourselves into that? And this is why I go back to the ESF example. It's not enough to have a senator tell everyone that we need to buy Bitcoin on the balance sheet of the treasury if there's no reason to do it. The reasons usually come from something something very climactic. And in the scenario of like an ESF, this is kind of, I think, one of the wedges you can drive a conversation about. And in that scenario, maybe the counterparty, like in Argentina, would want to have like gold, not gold, but like Bitcoin as part of the conversations in these counterparty arrangements.
Jeff Park emphasized that understanding gold's historical journey is key to imagining Bitcoin's future. Gold's rise began in private markets before becoming institutionalized by central banks, a path Bitcoin must also travel if it is to fulfill its promise as digital gold. Yet despite conditions seemingly aligning for Bitcoin's breakout rate cuts, ample liquidity, institutional interest, and corporate treasury demand, Park noted his disappointment that gold, not Bitcoin, has been the asset benefiting most from this environment. At the same time, Park highlighted a paradox within crypto's evolution: decentralization, while powerful, can also fragment governance and stall progress. In practice, the 2025 institutional era has leaned on cooperative or centralized entities, such as Stripe or Circle, adopting stablecoins, rather than the pure decentralization envisioned by early crypto advocates. This shift underscores the tension between Bitcoin's ideological roots and the realities of broader adoption in global finance. Let's get back to the interview.
But, we can't lose sight of the fact that if we want Bitcoin's TAM to grow and follow the path of it being digital gold, then you have to study gold and learn from that history and why it is actually have been adopted as part of the central bank's reserve asset when central banks themselves were not a thing, when it was actually private enterprises. So, in that same way, like sometimes it's hard to imagine, people talk about MicroStrategy becoming nationalized one day or whatever, and it sounds crazy, but really at some point, like if you study the arc of history, it doesn't sound as weird as it might. in how private companies, once they're big enough as a lender, ultimately do become subsumed by the government for the national interest. Not saying that's going to happen in MicroStrategy, but more people should be aware of the history of the Bank of England to then think about what the role of MicroStrategy. I'm personally disappointed too, because I think this is exactly the environment that I thought we would be in Q4, where Bitcoin would be unabashedly ripping. It just turns out gold is. Mm-hmm. And so the question is, why is Bitcoin not participating? The conditions are all there. There's a rate cut cycle coming. Global liquidity has never looked better. Institutional adoption is strong. The conduits have been built. And there's real demand coming from treasury companies. I don't think you could have expected or wanted a better outcome. And yet it's lagging. And at this time, gold is sucking all the air out of the room. And the more I think about it, there's really two things. One is, exactly as you pointed out, crypto, because it's so open source, can sometimes be a little bit of a disservice for those who are on the outside, because they don't know all the details of what's happening on the inside. But when they peer into it, they don't like what they see. When Bitcoiners fight other Bitcoiners about like the spam filter, for example, even if it's coming from a good place, it exposes like an open attack vector to which the notion of Bitcoin being this infallible code gets corrupted a little bit. And I'm not saying that we shouldn't embrace it. We must recognize what Bitcoin represents, which is, again, a living, breathing software. But when it happens at that level that puts real believers kind of against each other, as an outsider, as a financial advisor, or as, you know, someone's grandma, like, it's kind of hard to look at that and say this is like investable, right? Gold doesn't talk. Mm-hmm. So it's really just nice to know that it is what it is that you hold in your hand. Mm-hmm. I think decentralization itself is a very powerful thing, but it could also be heavily distracting, especially from like a governance perspective. We've seen this all the way through time and time. And so that's the second thing I was going to share, which is, you know, this institutional era in 2025 is being represented by a co-op by kind of centralized entities, right? It's actually about kind of, you know, stablecoin being adopted by Stripe or Circle, or things where like it's actually not the original like cypherpunk vision of like decentralized ownership. Mm-hmm. And there's like enterprises that are trying to use crypto assets for what historically would have been made fun of as like, you know, blockchain technologies. And so that too, I think, has caused a fracture amongst kind of the crypto community. Like there's true believers of permissionless decentralization, and then those who are more kind of fighting for the business building of broad-based crypto adoption. But sometimes those missions don't mix, mm-hmm. or they may look adversarial in the short term, but in the long term, it could actually be a win-win. But along that journey is a lot of room for error and misunderstanding. And so it's not just the infighting amongst the Bitcoin community, but now also what I've observed is non-Bitcoin crypto communities also fighting with each other and with Bitcoin. And that's like interdispersion of more chaos. And I think what sometimes those investors in the crypto community away from Bitcoin fail to realize is there's no world in which your token will ever succeed if Bitcoin fails. Mm-hmm. In my mind, there's no world in which Ethereum succeeds if Bitcoin fails. Mm-hmm. There's no world in which Solana succeeds if Bitcoin fails. It's a Bayesian probability, if A, then B, and B is Bitcoin. Mm-hmm. Bitcoin has to succeed first and foremost for everything else to work. It doesn't work the other way around. And sometimes I think people forget that big picture. And that too has caused a lot of noise, I think, on sentiment. And it's probably going to continue to affect some of the mood for the time being. But at the same time, as you pointed out, it is also its greatest asset because it drives attention. And I think ultimately attention means more people get in and start learning. And so eventually we're just all leveling up. Everyone's leveling up at different speed and different places where they're starting from. But the hope is eventually that, you know, our grandma can actually appreciate the living code, right? Mm-hmm. Not be scared by it. But it takes time. And we have to do it in like a thoughtful way that isn't going to turn off people from the outside too.
The path for Bitcoin to establish itself as a true reserve asset depends not only on its technological strengths, but also on how it navigates history perception and adoption. Gold's rise shows that longevity comes from integration into the financial system, first through private institutions, then through governments and central banks. Bitcoin faces unique challenges: internal divisions, governance disputes, and skepticism from outsiders who struggle to see beyond the noise. Yet these same debates reflect its vitality as a living system and draw more attention to its potential. The question ahead is whether Bitcoin can evolve from collateral and speculation into a trusted foundation of the global economy, much as gold once did, while proving resilient enough to carry the broader crypto ecosystem with it. What lessons from gold's historical integration into the global financial system could be most useful in shaping Bitcoin's path toward becoming a recognized reserve asset? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.